Hello everyone, welcome to Insurance Business TV and welcome to the final cyber insurance power panel of 2025. Yes, throughout the year, our panelists have been diving into all of the market trends and events to pass on their expert broker knowledge. And today is no exception as we wrap up the year. Well, let's welcome them back. We have Derek May, Vice President of Technology and Cyber at Hub International, and Mila Araujo, AVP Digital Shield, Personal Cyber Practice Leader North America at NFP and Aon Company. So welcome back both. And with the Canadian cyber insurance market stabilizing after years of volatility, Derek, tell me, how are you balancing that increased capacity and competitive pricing with the need to maintain discipline in the face of what are, of course, rising threats, especially around AI?
Yeah, I mean, as we've certainly seen claims persist despite the softening of the market conditions and the increased capacity. So we're in a little bit of a weird place, weird scenario where underwriters, despite claims increasing, have capacity to deploy. So they are in this little bit of a pickle where they're trying to meet budgets, but at the same time trying to remain disciplined in the accounts that they're taking in. But as brokers on our side, we're obviously pushing the envelope. We're trying to get lower pricing. We're trying to get less restrictive terms. We're trying to get, applications that might not have been very well completed previously with, things like multi-factor authentication or other security protocols in place. We're now seeing those get maybe a pass, whereas before that would have been an automatic fail. So it's definitely an interesting time. We'll see how it evolves over the next 12 and 24 months and into the future. But right now it's a little bit of a struggle between the underwriters, the brokers, and discipline.
And it's interesting as well, isn't it, Miller, on the personal side? Because I'm just wondering, is AI perhaps attracting more interest in personal cyber policies?
I think it could be attracting more interest than it is currently, but I think it's definitely a solution that we can deploy and that provides a lot of value to individuals because with the increased utilization and also advancement in AI, we're seeing an uptick in the threats, and this is causing an impact in several areas. A lot of the individuals who are being tricked by various schemes or AI or social engineering, have a lot to risk, and it causes them a lot of financial stress and emotional stress. So we found a good solution for many of these concerns is the personal cyber insurance. It really helps people when they're being hit close to home. And since this is a relatively new approach in insurance, personal cyber has not been around for the general public for very long. It's still available at very reasonable rates, and in some cases, has very limited underwriting requirement and is extremely accessible. So, this is one of the advantages that we're kind of looking at building an educational campaign around because we feel it's a really good solution that we can offer today.
And of course, when we think about cyber insurance, underinsurance has often been an issue. Derek, tell me about the strategies that you're employing to address that underinsurance with SMEs in Canada. Indeed, how can brokers and insurers work together to close that preparedness and protection gap for these businesses?
Yeah, I mean, ultimately, it comes back to benchmarking clients. So it's not only just showing them maybe what their peers are buying, and this is the trouble with benchmarking in some cases, that if you're just showing what their neighbor is buying, they too might have an inappropriate limit. And so, really customizing that risk profile for that individual or that client to ensure that we are benchmarking appropriate limits based on their specific risks and what they potentially could lose in the event of a loss. And the caveat that I always throw in there is that when it comes to ransomware, we never know what a threat actor is going to ask for. If they've been in your system for a week, a month, 6 months, if they've had time to check out what your cyber policy looks like, if you have a 5 million limit, they're going to be asking for 5 million if they can get their hands on it. So to counteract that, some cyber insurers have actually started to encrypt their policy documents, which is a great step in the right direction. But we do advise also clients that they maybe store these things offline. As far as the limit adequacy, we're really using this soft market environment where pricing is coming down to show higher limit options and to encourage our clients to potentially select that higher limit option, which quite frankly might be the same or similar cost as a lower limit previously. So using this opportunity as a way to get them a little bit more coverage, better limits, and certainly on a better footprint or foot standing moving forward.
I'm just wondering as well, Mila, is personal cyber a big area of underinsurance as well?
Absolutely. I think at this time there's a large majority of the population who either don't have cyber insurance or who don't understand it. So they don't understand the features that they're getting out of it or how they could protect themselves by obtaining it. What's also interesting is, it's something that's readily available, and the limits. Speaking of limits, for personal cyber can start as low as, let's say, 25,000 per year, but we have products like Digital Shield that can go up to 100,000 per year or more, depending on the circumstance. So there are a lot of options out there. And given the huge risk that the general population is currently facing, this could be something that could provide a lot of peace of mind. And what's also interesting, speaking of on a business perspective, is that there are certain personal cyber policies that can provide coverage for small businesses or home businesses, consulting. So this could be a very interesting solution, again, at a very affordable price entry point.
And Derek, if I can flip back to you, there have, of course, been a host of high-profile cyber incidents in Canada's utility and critical infrastructure sectors. So what changes do you make to your incident response planning or indeed the coverage for your clients in these industries?
Yeah, it certainly is top of mind for these industries. What we're really focused on is pushing that pre-breach preparation. That could include refining their incident response plan, maybe selecting vendors who they would like to work with in the event of a breach so that that transition happens very quickly and efficiently. It is, looking at their application, and some of these applications can be 12, 13 pages or more long. So certainly there's a lot of detail that we're collecting from these entities. There's no one's going to be perfect. And so it is, systematically putting on the roadmap certain pieces that maybe have been left. So perhaps they don't have a sock or a seam or some technical piece that is lagging. We can hopefully encourage them to put that on the next 12-month roadmap or beyond, just to hopefully get these things ticked off one by one. So there's a lot of stuff that we can do on the pre-breach side that will hopefully mitigate not only that claim from happening, or it'll be the stress and the impact that if it does ultimately happen, we're very well prepared to deal with it in that time period.
And of course, Mila, these high-profile incidents, they've actually been presenting opportunities on the personal side as well, haven't they?
Absolutely. So one of the things that we do is we work as teams, with our group benefits, our commercial cyber divisions, and our personal risk division to come up with solutions to complement what our clients are already offering. So some of the ways that we have been able to deploy solutions include providing personal cyber insurance as an employee benefit, sponsored by the employer, or as a voluntary benefit as well. And then, of course, there are also options to use this proactively as part of the incident response strategy, depending on the different scenarios.
And of course, Mila, you were talking a little bit about AI earlier. Just tell me how you're adapting your risk assessments to account for that growing use of AI-enabled social engineering in cyber attacks, as well as deepfake technologies as well.
So one of the ways that we're adapting and we're making sure to stay updated and innovative with our product offerings and speaking with our clients. And a key element to this is really working to understand the elements of the various risks that people are facing. So we found that, with the increased risk, the changes, and the threats and all of the discussion, that's in the media and everything about AI, people get a little bit confused with the definitions in their policy wordings or how a different policy is going to respond to the various scenarios. So one of the things that we do in the risk assessment is we like to ensure that we have a good understanding of what the clients are looking for and how each policy will respond accordingly. So in a lot of cases, we've also found that there may be a policy that's being, that is endorsed to cover, let's say, certain cybercrime that we can complement with an additional policy like a personal cyber policy to fill the gaps that are missing very, very often in these wordings and in the intricacies of these complex attacks.
And of course, Derek, it's kind of getting harder and harder to know what's real, isn't it?
It is. And I think for the viewers that have tuned in for the quarterly updates in the past, I'm probably going to sound a little bit like a broken record because I keep saying it's coming back to basics, right? As technology improves, as deepfakes, AI really improve the quality of the social engineering attempts against us, the best thing that we can do is go back to basics. So it's picking up the telephone, it's calling our colleague, it's walking down the hall, it's speaking to them in person, and making sure that we're not just hastily sending out a wire transfer or clicking on a link or doing something. It's stop, think, be that human firewall, and take that extra second just to pick up the phone. And if we can do that, we're going to stop a lot of these claims. Unfortunately, we've had clients that have every process, every policy, every procedure in place, and 99 out of 100 they do it right. But that's why cyber is there. Cybercrime coverage. We're there for that 1% or less, that happens, and we can respond effectively to that.
Well, not much more chance for repetition because we're into our final question of our final panel of the year. So let me frame it like this. As cyber and technology risks become more complex, interconnected, and of course, we're getting broader economic and climate-related volatility alongside that, I'd love to know from each of you, what steps are you taking to ensure resilience and sustainability in your client's cyber insurance portfolio? So Mila, I'll start with you.
I think a key part of the resilience strategy needs to be the ability to evolve and utilize the new products and features that are available or wordings or definitions that come out, to the advantage of our clients. And I think we can leverage a lot of the different things that we see, being developed right now and really educate our clients in the ability to move and change with the risks as they happen. So we're fortunate enough to be in an industry where we have access to, so many different types of products that can respond on different levels. And, again, circling back to the advantages that the newest kind of member of the cybercrime policies, the personal cyber policy can provide, I think, is a huge advantage both for organizations, for companies, and for the individuals on their own as well. And it's part of the strategy, I think, when we review the insurance packages. So putting these types of policies in place proactively before a breach, and also having them in place so that they can respond reactively in the event of an incident, I think provides us with some really good tools to ensure our clients have those advantages at their fingertips.
What about for you, Derek? Have you been making any changes?
Definitely. I think historically from an underwriting perspective, the insurers have always looked at the risk from a first party perspective. They're just looking at the client, what controls do they have in place? But with the prevalence of third party claims or dependent business interruption claims that we call them, such as CDK, which affected the auto dealers, within the last 12 to 24 months, we had CrowdStrike. We just had Cloudflare earlier this week. We had AWS that was down. We're really starting to see a shift now in that risk really should be focused at these third-party vendors that we're so heavily reliant on. So while we haven't necessarily seen the underwriters really push to dig into those types of risks yet through the underwriting process, I think as forward-thinking brokers and underwriters, starting to ask the questions of, what kind of due diligence are we doing with these third parties that we're so heavily reliant on? What security do they have in place? What contractual controls are there to protect us if they go down? Now, it's certainly going to be very difficult to negotiate with the behemoths of the world, right? You're not going to get AWS probably to indemnify you. However, there's many other third parties that we're really reliant on, and you might have a little bit more leverage with them. Again, just to protect yourselves, because again, when we're sharing that sensitive information or we're very heavily reliant on these third parties, all it takes is one ransomware or system failure on their side, and we're going to be feeling the pain.
Oh, great note to finish on. And indeed, huge thanks to both Derek and Mila, not just for today, but for their contributions throughout the year, as well as, of course, Adi and Suman, who couldn't be with us this time around. Remember, this group will be back together again in 2026. But until then, enjoy the festive season, and we'll see you next time right here on Insurance Business TV.